And there we are. We are live. Please do not swear. How are we all?
Good, thank you.
Good. So welcome to October. It's October already.
You had to check then, didn't you?
I did. I was like, where are we? October's edition of Money Talks. And I think first thing we need to address is Adam Davitt. Are you attempting to join the avocado crew with that hoodie or?
No, it's not quite the same, is it? It's not got the avocado logo. It's never going to be up to scratch, but it's as close as a mere mortal can get.
Absolutely.
Imitation is
represent the colour.
And actually, Tom, for a second, I thought you had our black hoodie on as well.
We're getting there. Just desperate to be part of the family.
Need to get you guys some blue hoodies for your promo videos. That's got to be the next one, isn't it?
We never wore a suit anyway, so it wouldn't quite be the same.
Great. Well, look, if you're watching us live, we're streaming on my personal Facebook page, the avocado pages, and our YouTube channels as well. So if you can hear us loud and clear, drop us a comment, hit the like button, and we'll be taking questions live as we go through. So just tap them in the comments and we'll get to those. And if you're watching later on your lunch break or whatever, still drop it in the comments because we will come back and answer you. So first topic. I did a little live yesterday, thanks to my phone call with you boys, about HSBC and some rate drops that they've done, excitingly, for small deposit amounts. So tell us more.
So I said to you the HSBC 2-year fixed rate at 90% is now a market leader. We had a little research whilst we were on the phone of different scenarios for different levels of deposit, and we found that one to be the best one that we could find with a 10% deposit. I think this time 12 months ago, Nationwide were one of the only lenders offering 10% deposit mortgages. And from my memory, very vague recollection because it was so busy, I think the equivalent rate at that time was 3.29, I believe, for a 2-year fixed rate with a 10% deposit. So over the course of 12 months, the impact of more lenders coming back to the market has mean that rate is basically halved, as I should say. And
we're not out west anymore.
That's had a massive impact for first-time buyers, obviously, as that's going to mean that those payments are going to be drastically cheaper than they would have been 12 months ago. And those rates, yes, whilst the HSBC, I think it's 1.79, is the market leader, there's now lots of rates in between that and early twos. So, we've got 1.9, 1.95, 1.99. So lots of different options. Even if you don't meet HSBC's criteria, there are other options that are there or thereabouts. So lots and lots of really competitive, low deposit, high loan to value deals. And we can agree that there's certainly a lot of first time buyers out there at the moment. First time buyers tend to be the ones with lower deposits. Not always the case, but it tends to be the ones with the lower deposit, all fighting over the same houses. So if they're finding having to offer a little bit above the asking price because there's so much demand, certain lower mortgage rate is going to help.
Yeah.
Something else interesting happened at 90% as well this month, which is not so much to do with rates, but to do with loan amounts. So Accord Mortgages, who are part of Yorkshire Building Society, and then a week later, Halifax followed suit, increased their maximum loan, which has helped me with a couple of cases for customers that have had a 10% deposit, but are looking to buy more expensive properties. So for example, they're looking to buy 700,000-800,000. Previously, they weren't able to, with a 10% deposit, borrow the amount they needed to be able to purchase a property. So they're left in limbo to some degree to have to then save additional money to get to 15%. There's loads more available deals. Or what they'd have to do is to go to a lender that's not offering quite as competitive rates. So I'm talking 3.5% plus on some instances to be able to borrow that extra bit. But now you've got mainstream lenders, like I said, Accord and Halifax going back into the market with higher loan amounts, which is also interesting.
So have the other lenders, sort of as a general rule of thumb, is there a price cap on a kind of 95-90% loan to values?
Yes. So it's generally about 500k.
Okay.
there are some that have a much lower and some that have much higher, as Adam mentioned. But generally at 90%, you'll find that most of them want to over about 500 a day. But those two going up to what you just mentioned, both increasing, is, again, really, really good news. And it's just a continuation of what we've discussed over previous ones of these, is sort of criteria gradually edging back to where it was pre-COVID. So as well as that, we've now got self-employed criteria really getting better, lenders considering you if you've taken the grant, and there are some lenders that will even take the grant as part of your income. So again, if you've declared it on your tax return, which you obviously should be doing, then they'll include that income as part of your income to be used for mortgage affordability. Whereas before they were just saying if you've taken the grant, not interested. So really good.
Okay, cool. So for those people who've just started joining us as well, fear not, Adam Davitt is not masquerading as Sanjay in a pink hoodie. He's just wanted to match the background of the stream, that's all. So I think what I wanted to do with you guys today really is, we're so busy at the moment, all of us, which is great. And for first-time buyers, or actually not even first-time buyers, just any buyers and sellers right now, the process is going so quickly that there's so many questions along the way, just on the things that I think we can all sometimes take for granted. You know, we know how to apply for a mortgage and when payments start coming and this, that, and the other. So if we just run through some basic stuff, when someone wants to apply for a mortgage, what documents do they need? What do they need? You know, if someone's just started a job or whatever, what's the basic stuff that they actually need in place to be able to give you guys to actually do that mortgage application?
I'll give you an easy start. So you're obviously going to need to prove your income. So let's say you're employed, you're going to need proof of income. Easy starting place would be 3 to 4 months pay slips. If you receive bonuses, you might want to have your P60 to hand, or evidence of your bonus pay slips if they're in the previous few months or year, however you're paid. You're going to need bank statements, twofold. So you're going to need bank statements to show your income going in and your natural household expenditure going out, but you're also going to need bank statements for your proof of deposit as well. So if you're building up deposit and it's in savings accounts, again, you need to evidence three to 6 months history, maybe, depending on who you're going with. ID. So you want to make sure you've got your passport or your driving license, and then some form of proof of address as well. So council tax, utility bill, again, dated within the last 3 months. Those are kind of your easy starter pack for PAYE. Tom, anything to add?
It's a common misconception that people think that you need to have been in your job for a certain amount of time before being able to get a mortgage. And I hear almost everyone say, when they've started a new job, you know, I've started a new job, but I know that I need to have been in there for 3 months before I'll be able to get a mortgage. I can categorically say that is in fact not the case. Some lenders, if you've got a job offer or a new contract, and that job starts up to 3 months in the future, there are lenders that will consider that income straight away. So you don't need to have started that job. Most people think they need to have been in the job 3 months. A lot of lenders, you know, if it's your first day, they'll consider you, and some lenders will be a job offer 3 months in the future. So there's no minimum time in employment with a lot of lenders, and as I said, some lenders will even consider that income if you haven't started the job yet.
Wow. So if you fancy doing all those big life changes all at once, throw in, have your baby, get married, move house, all together, you'll be fine.
Is funny how often all of those things happen together.
Come across so many people who are getting married, just had a baby, want to upsize, someone's got a new job starting, and I guess if you're going to uproot everything, do it all in one go, right?
If you can survive all of that, you can survive anything. So good luck, yeah.
You may as well start your own business at the same time, wouldn't you, as well, just to add an extra layer of complexity into the mix. Mm-hmm.
Well, having just not long started my own business and moving house, I can confirm it's I wouldn't recommend it. Get through it though. It's fine. Get a nice oak staircase in the end. It's all good. And then something I often get asked is, but what point do I start paying my mortgage? Is it when the mortgage application goes in? Is it as soon as I exchange contracts, which is obviously when the deal becomes legally binding? Do I have to pay more on completion day? How does that work?
So all lenders do it differently. which is obviously really helpful. So first of all, a lot of times we get asked from sellers, particularly when they're paying off a mortgage, about do they need to tell their existing lender they're paying off their mortgage, they're ending it? Do they need to stop paying their mortgage, cancel the direct debit because they're selling? So first of all, you essentially don't need to do anything when you're selling, when you're paying off a mortgage. You don't need to tell your existing lender that you're paying off your mortgage, and you certainly don't need to cancel any direct debits. And please, for goodness sake, don't cancel any mortgage direct debits that are due to be going out. That the lender will take care of all of that for you, and then your solicitor will simply pay off your existing mortgage with the funds from the sale of your property. So the good news is you don't need to do anything. Paying your new mortgage payments will start after completion. So exchange is irrelevant. The completion is when the lender sees completion, so when they release the funds.
And then keys and move in, basically.
Correct. Yeah, absolutely. And then your first payment on a mortgage will generally be more than a normal payment, because you're paying almost a month and a bit. You're paying a full month's payment plus the interest in the days of the previous month where you had the mortgage. So we always say budget for about 50% on top of a normal payment for your first month.
Like a payment and a half, almost.
Yeah, almost like a payment and a half. Yeah, and then it will drop down to what you've agreed from the next month, and then the first payment will be usually in the month following completion. Although some lenders are an exception to the rule. Some lenders take a payment 10 days after completion. There is one lender that will always take your payment on the 16th of the month after completion. There are some weird and wonderful rules out there. But generally, always after completion, and normally in the month following completion, and just budget for it to be a little bit more than what you're expecting.
Fine.
Lenders will always send you a pack as well when you complete with them, and it will have information about your payment schedule, when the first one's going to come out, how much it's going to be, and almost like a welcome to us, because that's when your relationship with the mortgage company actually starts, is on completion, when you get the keys and when you become the property owner.
Yeah, makes sense. So Tom, we used to get asked that all the time when we were doing new builds. People would exchange in the January, February, and maybe not moving in until September.
Yeah, absolutely. I've just done a mortgage application this morning, fun enough, for a couple that are buying a new build. They're exchanging next month, but not completing until next September. So it would be quite unfair if their mortgage payment started next month, they were still in their new home for the next year or so. So definitely won't stop paying until after completion. Yeah.
Oh, good. So I was having a conversation with a friend of mine yesterday who is looking at buying a house through us, and his house, he'll be selling it at circa kind of 420, 425, something like that, buying at 450, 460. And because the rates are so low, his payments are going to be less. So crazy, isn't it? How you can it's showing people you can afford to upsize. And I mean, amazing if the wind's blowing that direction where your payments go down, but even if you end up paying the same with a slightly higher mortgage, it's just madness.
It's more common than you think at the moment.
We always try to do affordability with like something that's tangible, that people can relate to. So when people are about thinking offering 300 or 310 on a house, for example, what do those numbers actually mean? Well, really, they don't mean anything, because you're going to pay a heck of a lot more than that over the term of a mortgage. We try to sort of do it in regards to monthly payments, because that's what people can relate to. That's what feels real. What's going to be coming out of my bank account each month? So the fact that your friend is able to upsize and pay less sounds like free money to me.
You heard it here today, folks. Okay, and another question that I've had recently is, what about, you've got a couple buying together, do they need their payments to come out of a joint bank account? Does everything need to come out of the same place, or can how does that work?
Doesn't need to. I mean, it's really down to the customer preference. I mean, some people like to keep separate finances and pay into a joint account, and then have all the bills come out of the joint account whilst keeping their own kind of independence. Other ones prefer to set up a joint account when they start that commitment together. If it's two first-time buyers that are buying the first home together, they'll say, well, let's have a joint account and what's yours is mine and what's mine is yours. Or you can have it just coming out of one account and that person covers the bills. It really comes down to the preference of that customer. Doesn't really matter. Lenders don't mind either way. Just need to make sure that it is a bank account and mortgage payment's going to get paid.
Yeah, just that minor detail. Minor detail. Cool. Okay. So if anyone's got any questions and they're listening at the moment or listening later about applying for mortgages, when things get paid, how it all works, what interest rates actually mean, fire your question in the comments and we will get those answered.
Just to go back to direct debit, sorry, Ellen, a question again for direct debits we get asked a lot is, can I change the account that direct debits come out from later? And fortunately, the answer is very much a yes, and it's very, very easy to change the account that the mortgage payments are made from. So it's very it's very normal, very common for Mr. and Mrs. first-time buyer not to have a joint account and then ask, well, I don't know what it's going to come out from because we're going to set up a joint account once we move in. So a lot of people will just put in one of their accounts for the short term because your mortgage application will always require you to put in direct debit details. And then after completion has taken place, you can make one phone call to the lender, change the account that direct debit is going to be made from, and it's done in 5 minutes. So yeah, very, very easy to do. Yeah,
my experience with changing payment dates or accounts that it comes out of seems to be fairly simple, thankfully. It's not too much of a headache, which is good. And what about Tom? We spoke about a chap not long ago who runs his own business as a sole trader as opposed to a limited company, so self-employed. What did those people need when applying for a mortgage?
So generally, mortgage lenders will ask for either your latest 2 or 3 years tax returns. Mm-hmm. So the document they're going to be looking for is a tax calculation summary, which is sometimes referred to as an SA 302. And then each year will have a corresponding tax year overview as well. So for 2, sometimes 3 years, 2 documents for each year, tax calculation summary, sometimes called an SA 302, mm-hmm. and then a tax year overview. And then a lot of mortgage lenders are now asking for 3 months business bank statements for sole traders or self-employed people. That can be your personal account if you just use your personal account for all your business activities. When you're a sole trader, you're not required to have a business bank account. So a lot of people just use their personal account. So it could just be 3 months personal account. And what they're looking to see is that the income that you're declaring on your tax return ties into the income that you've been receiving over the last 3 months. So I guess just due to coronavirus, you might find that people have in the past year earned a lot more than they might have earned in the last 3 months because coronavirus has had an impact on their business, as it has to a lot of people. So they're just going to be making sure that, you know, if you declared £40,000 worth of income, that you're having an amount that would roughly tie into £40,000 coming into your bank account, and it's not £100 each month, and then a lender might have an issue if you're having £100 a month come into your business bank account.
Want to add on that, if you are self-employed and you are going to be using your tax calculations and your tax year's overview, if you're looking to do it apply for a mortgage in the foreseeable future, you want to make sure that your April 2021 has been done, because your April 2020 is now out of date from a lender perspective. If you're applying for a mortgage, you need to make sure that if you think about it, whilst you don't have to do your April 2021 from a tax perspective, your most recent tax return would be April 2020, which is nearly 18 months old now. So lenders will need you to have brought that up to date to get a more closer reflection of what your current income is. So yeah, if you're self-employed, looking to get a mortgage in the foreseeable, make sure your April 2021's been done.
Just got to be the whole time.
Yeah, really good point. We're in that sort of fun period now where no lenders are accepting April 2020 as the latest year, but no one has done their 2021 return because it doesn't have to be done until the 31st of January. So we're just in that sort of period where you expect people to have their 2021 tax return, but because the government lets them do it until the 31st of January next year, accountants or people just won't have done it yet. So that will add, a week onto your mortgage application timescale where you need to have that return before you can apply for your mortgage, because every lender is going to expect that.
And well, there we go. What a shiny example of why people need to work with a broker to advise them of all this stuff. It's an absolute minefield.
Yeah, absolutely. Yeah, exactly. If if you're self-employed and you've read online that you just need your latest 3-year tax returns, then why wouldn't one that was April 2020, which is perfectly reasonable to have as your latest year, not be okay? So yeah, absolutely. If you're self-employed and you're thinking about applying for a mortgage, get that 2021 tax return done, because that's going to be something that now every lender's going to ask for as your latest year.
Amazing. Okay. We're coming up for 20 minutes now, and Tom, I must say, we haven't heard the dog at the door. So has he arrived? Or?
He is here. We are dog sitting, and a little brown cocker spaniel will be making an appearance at some point, but he's obviously been very well behaved. So that's good to hear.
Excellent. Good to know. Fine. Well, Adam, thanks for coming so on brand for this month. You've kind of let the side down. I've got nothing more than some pink nails.
How do we improve on that next month?
What's that? All be branded?
Yeah. Where do we go from here?
You need your partner's financial, I can see you
we have talked about this, so we are going to do it at some point. So maybe that's a target for next month for all us to be wearing our branded designer gear.
Let's make it happen. Let's take it away. It's got to happen.
Well, if you've managed to watch this live on any of our Facebook pages or YouTube channels, thank you very much. Do make sure you drop us a like and a comment so that we can make sure that it is working on all those different platforms. If you're watching this later, if you've got any questions about anything that we've talked about, drop it in the comments. We'll all keep an eye on it, and we'll pop the contact details for Tom and Adam in there as well. So if you want to buy now, you want to sell now, you're even thinking about it now, just get hold of them, because like they've said, there's so much that you might need to get in place you've got no idea about. So come to the experts. We're all here. Great. All right. Anything else from you,
Ellen? No, thanks for having us on again. Always a pleasure. And we'll look forward to seeing you again next month.
See you later.